Hey guys, it is Mark Coe for the 24th of October. Just wanted to take a look at some of the market movement today. We do see a stronger dollar and we see weaker equities generally across the board. Uh, Quick note, we did get a stop out on a short-term pound trade overnight. Had been looking for some rotation higher in pound, didn't get it. Took about a 40, I think it was just over 40 tick loss in the pound. So as you can see, what I was playing here in the pound was basically support up in this area that didn't hold, broke down, and my stops were below those lows. So I did get stopped out on that overnight. Don't want anybody thinking all I deliver is the good stuff here, but there's plenty of good stuff to deliver. So today, what are we talking about? Sunday night, I did the free preview. I mentioned this level in the E-minis, how key this 27.45 to 50 area was on the bottom. So it was, it was 27.45 to 50 is what been the focus on the bottom walking into the week. And we played some rotational off of 45.50 area. And again, it was a really tight area there in the S&P that we were working against. And I talked about it from the standpoint of a whole lot of movement below that didn't need to be really focused on unless you're trading down there, but how the importance of this 45 to 50 would act as support. So walking into the week, had some rotational opportunity off of it on Monday, and then it finally broke on Tuesday, and it broke in a big way. We went down and traded to 92s. Talked about that a little bit yesterday, but look at the beauty. Again, this is the idea of a major level, right? A major level break, because we used 40 to 45 as support, and it provided plenty of rotation, plenty of movement higher, plenty of movement higher. Now it broke, right? So even if you're playing it to the long side on Sunday evening, you're out. You get out. You have to pay a stop. You're done. But it's the tap back into it, right? That was a massive rally yesterday, kind of midday up into U.S. afternoon. But look where price can no longer trade higher. I mean, again, 92s to 50s. That's a big move. But look at the level that holds. Doesn't mean it doesn't trade into it. Or I mean, in this case, I mean, we traded 54s, traded just above it. But I mean, that's minor in the whole grand scheme of a 100 handle move in the S&P over the last couple days. 5 points is nothing, but you're looking at the zone, and what does the market do? I mean, think about what that move looks like, and think about what it looks like on a short-term chart. It looks massive because it's really strong. And where is it really strong to? Right up to the point where the sellers took the control, and they wouldn't let it go. They wouldn't let it go. Traded in there again this morning. Traded into 46, right? Traded into 46. Couple notes I put out this morning on the Twitter, talking about E-minis, that we got a tiny little rotational bounce. I say tiny, but it was still about 16, 17 points in the E-minis right off of this level. Right off of that level. Market finally broke. So if you're playing that level more than once, definitively you're going to give up a few bucks. But you understand what the bias becomes. The bias is still to the sell side, as long as sellers maintain this level. Right? And so you understand the difference between a scalp trade against the market momentum versus one that's more trending direction. And the only difference with the sell side up here near 27.5 is that when you go back, again, bigger picture time frame, you're starting to get a better sense that sellers have controlled this market, and they're the ones that are dictating that movement. And buyers haven't pushed it through a key significant area yet down in this spot. What they've done is they've held it, right? But think about it. From the breakdown, right, from the highs, the breakdown at the highs, the best buyers have gotten some consolidation. So this is that 27.50 area I'm speaking about. Right? So that becomes the key. That was consolidation on the bottom. That's why it's so key on the way back up. And buyers never regained it. So if you're looking at fade opportunities at bottom edge, they're fine. They're still fade opportunities. A lot of them paid some good rotational money, but they were tiny. The big picture was the sell side. Right? And I talked about that. I talked about the significance of the 45.50 area. So anyway, we continue to see it. Currencies of, certainly we're seeing a dollar bid throughout euro, pound, across the board. Dollar yen is obviously a little weaker, just kind of more of a risk off standpoint. But the real volatility, at least U.S. session, has been maintained in both crude oil and E-mini. So there's been a lot of focus these last couple weeks on those two markets, and And as I said, crude managed a very similar type of activity, which was strong buying off yesterday's low right into some sell area and then back lower. I mean, today we had a level at 67.70. It was our second resistance level for the U.S. morning, and we traded 67.72. But this is where 67.70 comes from, right? Yesterday. That's where it comes from. So we knew that going into it. It's not, you don't know it after the fact, you know it before. And that's the whole point of this analysis. So anyway, I hope you guys had a good day, and look forward to a nice finish for the week, and cheers for now.